from Richard D'Souza, and Richard wants to know what kind of funds are better, actively managed funds or index funds?
Well, if you look at historically in the Indian context, actively managed funds have done far better than the index funds. But of late, particularly in the large cap category, index funds have built up a very compelling case for themselves. And the reasons are, two or three. One is that ever since SEBI undertook the reclassification exercise, the investment mandate of large cap funds has been fairly restricted. So earlier, they could outdo the broader markets by having slightly higher allocations to mid and small caps. But now that has been curtailed down to a significant level. And within the restricted universe of stocks, now they have to, from which they have to build a bulk of their portfolio, it has really proved to be very difficult to generate alpha. And that links to the second reason that which is really market efficiency. So in the broader well-tracked universe of large cap stocks, it has genuinely been difficult to outdo the markets. So for these reasons, index funds have started putting together a very compelling case vis-a-vis the active funds. And also the other advantage that they have is the low costs. So in the large cap space, I would say certainly index funds are worth a look. But once you move to other categories which go down the market cap segments like the multi caps or the mid caps and the small caps, it is by and large actively managed funds that rule the roost. Also, these are the categories where there are not a lot of options available in passive investing. Also, once you move to categories like small cap, replicability of the index itself could be a challenge for a fairly sized fund. So I'd say that in these categories, it is still actively managed funds that are the way to go.